pedal when the lane moving fast. Hey, let them all cross. If they hate, then let them hate and make a bigger boss. Hey.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Podcast, the top podcast in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines. But most importantly, you guys provide some actual insight into what you can do with all of this information. This is your first time tuning in. Welcome. This is the real side of freight, ladies and gentlemen. And I say that before every single show. And what I mean by that is I only speak with transportation professionals, because at the end of the day, I want to talk to the right individuals who have done what you're looking to do, or who are currently doing what you're trying to achieve, so you can take that information, apply it, utilize it, and see a meaningful difference in your business and your life. Happy Friday, everybody. I got a very special guest. I'm going to bring him up here in a second. It's a very timely conversation. When him and I were planning this episode out, I don't know if either one of us could have predicted that literally around this time, there would be no less than like 15 headlines this week about large companies looking to acquire some businesses out here. So with that being said, I got my good friend, Mr. Chris Kolquist, back on the show to break down some M&A activity. So, Chris, thank you so much for taking the time to join me this morning.
Thanks for having me back, Chris. I'm excited to talk about it. And there's a lot going on in the market. So it's going to be a great session.
No, it's like literally, I just saw an article this morning came up from TT News about Schneider. They're looking to make some aggressive plays out there. I think yesterday on social media, on LinkedIn alone, my feed had like 7 companies who are like, we're looking to actively acquire businesses right now. And it's, I think it's an interesting time out there. And so it's like, how are things going from your end?
Yeah, I think you got a lot of pent up demand. If you think about the freight recession that we all participated in for 3 years, or however you measure it. And, that impacts M&A and on multiple, whether it's the buyer or seller and just investment in general. So I think you get some pent up demand. That's a big driver. Yeah, my team was looking at this. We thought 2026 would be a very active year, and that's happening. I think even the back half will even be more. So, I think it's finally a good, healthier environment overall, which also drives some good M&A discussions.
Mm-hmm. So what's a big miss by a lot of people, Chris, if they're like, hey, this is, we'll start with this. Obviously, everything that went down with SCOTUS is probably going to change a lot of people's opinions on if they want to continue down this path in this business. Maybe they're at that retirement age, or they're just kind of like over it, right? They're like, there's just too much risk. My shield's gone.
I think a couple of perspectives. You think about SCOTUS, and the outside world. So we talk about a lot of business owners. We're in the space, but then we're also doing deals and raising money. And you talk with someone who's not in the industry. They will talk about those type of things and the freight market kind of recession. So it's very interesting. I've been in the space too long, so I kind of take for granted that it's a good space to be. It's fragmented. There obviously has been some challenges operating the last few years, but I just think there's a really good growth path ahead for good operators who make good decisions, who are commercially focused. And so, I think there's different perspectives out there, which we can all appreciate. But there's still a lot of people who are down on the industry, and unless you live it, every day like you and I do, we know how hard it is. We also know customers need help. There's probably bigger trends for them to outsource now than there ever have been. So that trend is going to continue, which is going to be great for our businesses.
So, I was thinking about that. Like, is there any resistance out there from Wall Street or like outside capital firms that don't play in transportation, right? Because I think like that might be something that might come as a surprise for individuals, that there's actual M&A companies and investment banks that just do freight. But it like just a couple of years ago, it seems like if you had a pulse and a napkin on an idea, you could get funding in like Silicon Valley. Everybody was just throwing capital inside of transportation.
Yeah. That world has changed. And I don't know what year that started, but 18 to 21 or 22, whether it's capital or people on the outside, they love the fragmentation, just a lot of the dynamics of the industry, the potential roll-up strategies, the tech. There's a lot of things that they really like. So a lot of investment came in that didn't really know the space. Some did okay, some did not. And some of it's timing. If you invested in 21 and bought something, highly likely you're not doing very well. So there's a hangover effect from that. It is not like that today. You talk to a lot of people outside the industry, and they will basically be like, well, you got 3 years of freight recession. The overall industry has really low operating margins, EBITDA margins. You don't have a moat. All investors want this moat and all these things. And, some of that's true. I think other things are, hey, it's big, it's fragmented, and good operators win. And I just think so. I think it's different today. The investors that we see know the space, appreciate it, the pros and cons that come with that, see a lot of growth, but see it differently than, we'll call it, uneducated investors that are harder to get over that hump.
So I look back at a lot of what we've kind of gone through here these last couple of years. And I mean, nothing that we experienced was like an anomaly. Like recessions happened all the time. Depressed markets happen all the time. But now that we're kind of coming out of it, and, maybe I'm an optimistic realist, Chris, at the end of the day. It seems like there's a lot of people who are, I don't want this is going to sound terrible the way that I say it. I think they're overzealous about where the market is, and they think that there's going to be a cataclysmic rise and that like everything's going to be better and rates are going to shoot through the roof and then everybody's going to start making a ton of money again. But from like the outside looking in, from my perspective, there's a lot hinging on like this could cool off at some point, right? Because if you look at other economic factors like consumer credit card debt, loan defaults, these are at very alarmingly high levels. So what are those correlations out there to the freight market? And then every day it seems like everything in Iran is going to be over. And if that happens and then diesel prices drop $1 a gallon, does that fundamentally change rates and everything out there as well?
Yeah. I mean, this is a supply driven change in the market. So I think we all know that there's different reasons for that. But if you take a step back, it's not like past markets where demand started like COVID, like demand went crazy and the market went crazy. That is not what we're in. I think that's better for long-term health. And I think that'll be better for everyone. But you bring up a good point. So it's supply driven. So rates are coming up off the bottom, which they should. And I think that's a better environment. If demand were to pull back, that would have a pretty big impact, right? And so there are a lot of different assumptions around there that there could be reasons that it could pull back right now. Again, there's so much freight out there as it is. What I feel good about, whether it's taking market share or some of those type of things, but I don't think you're going to get a free ride, right? I don't think it's going to be like, because there's been times in brokerage where you get in brokerage and it's just growing like crazy. And again, brokerage grows faster than the freight market, right? That outsource, usually it's 2x or maybe it's more, right? And so you've had a lot of tailwinds over these many years to be in the brokerage world, which has been great. And the market's really driven a lot of that favorability. You hear me talk a lot about being good operators, and I think ultimately will be a bigger insight on who wins and who loses. But think about that. It's been supply driven, and we will continue to see that, right? And so I do think the rates are going to come up. But the demand's been muted to okay to fairly good, but not, it hasn't been great. It hasn't been super good. It hasn't been, and there are signs that it could go down, positive signs that it could go up. But yeah, I think it's it is a supply and demand market. We all know that in transportation.
Yeah. I just look at it it's kind of like a glass house right now. It's very encouraging to see where things are out there. But like, I also look at a lot of the external factors that are coming in. And I think you look at like what, the FMCSA just recently put in with their new Motus registration and how that seemingly stopped any and all new carrier registrations from happening out there. So like, I think it's too, and obviously everybody on social media is an instant expert in all things. So it's very telling where some people's opinions are. For me, it's like, I'm looking back and I'm seeing that and I'm like, all right, so then if that's the case, if no new registrants are happening out there, then Motus is doing its job because and again, I'm sure there's some tech bugs that need to be worked out and that's part of it. But if anybody paid attention to the FMCSA's press releases on this, and I had a front row seat because I had them on my show talking about this, they explained that like, hey, we want to stop people from getting access to being able to operate in this country if they do not meet certain parameters. So I think that's a whole other side of the argument that's happening out there. But I'm bringing that up in regards to the supply side of things, right? Because that should keep the supply of trucks depressed enough to where it can't really catch up here. And that is going to be good for the market overall, for the legitimate providers, the good operators that you're describing here, Chris. And I think that, because again, I haven't seen a surplus of good operators and good trucking companies complaining that the Motus registration stuff isn't working, right? Like, yeah, there's been some who have said, hey, I had some problems, but I got it figured out and we're good now, right? So I look at it where I said this a couple of months ago. I think that we could potentially embark upon the golden age of trucking that I don't know if this industry's ever seen, because we are looking at it from an FMCSA standpoint where they are cracking down on a lot of the fraudulent behaviors that a lot of us inside of the industry have been screaming about for years, where now I think back to your good operator statements there, this is your time to shine, where you could literally work with, somebody like yourself. And I'll plug you guys where it's like, hey, I want to exit in a couple of years. I need to, like, we're good. We have this going. I need to make myself appealing to the acquisition market. I'm not there yet.
Right. Well, a bunch of things in there. I mean, again, to the good operators, whether you're on the trucking side or brokerage, I mean, there's a lot of players out there, and sometimes it's been hard to differentiate. And I do think that's going to start, whether it's the supply side, like you said, on the carrier side. We all know it was pretty loose there. And again, you go back to a very entrepreneurial country we live in, which is great. You got a lot of positive things, but I think it went a little too far. And I think, we're pulling back. And so I think that's going to be real, that, and shippers really kind of benefited for a lot of cheap rates for a while, which is, and for a lot probably below where people can really sustainably make money. Luckily, people made enough money during COVID, and then there's enough different credit things out there for people to stay alive. I know that's changed a little bit, but if I think about why the Great Freight Recession went so long, and we've never seen it like that, there's multiple factors that really drove that. Back to your other comment on, again, think about being ready for the next stage. It could be multiple things. It could be like, hey, people come to me, we're looking to grow, we need a partner, or we're looking to bring on talent, or yeah, I've been doing this for a while and I want to get out in 2, 3, 4, 5 years, whatever it is. I'm a big believer in, don't just raise your hand, get a plan around it, get some people who know what they're doing, start to network, start to do some of those things. And it's hard because we're all busy with kind of the day jobs. But I do think that's a really positive thing. It could be selling, it could be buying, it could be investing. There's a lot of different things to try to get out in front of, because even for us, networking's really important. You think about all that's happening in technology, to make sure you stay up with that, you got to be chatting with a lot of the different technology partners out there, which is, I think that's the challenge. There's so many. I mean, it really is hard, and there's some really good tech coming out, and there's all this AI stuff, and you're just trying to keep up with what's real and what's not. But I think those type of investments, and I've talked about that with other companies. I'm like, we're better off going it together. So if we got 3 companies, they're all trying to figure out AI on their own, why don't we do that together? And I think that will be much more efficient than doing it on your own.
What makes a brokerage appealing to be acquired? Because if you look back, I mean, there's, this, and this is why I think it's important, if you're going to go out there and do this, you got to work with somebody like yourself who understands it, right? Like, you sat on the floor, you've done the job. And I look back and, I look at my operation, like, yeah, we have great relationships with our customers, but like, there's nothing contractually binding that they are going to, that they would continue to work with us out there. So is it systems? Is it processes? Is it a tech stack? What does that build out look like, to like, because I know that there's probably a lot of people out there now, Chris, who are like, hey, I'm done, right? Like, I don't know what's going to happen, but I don't want to see my life's work go to waste.
I always start with talent, and talent drives a lot of things: relationships, growth, technology, all processes, right? I mean, these things don't happen on their own. And to take advantage of technology and have a culture of AI, it takes talent to get there. To have a relationship with a customer, it takes talent. If you lose that customer, to go get a new one. So when we look at companies, that's ultimately what we're looking for. You're looking at all the other, you look at performance and be like, all right, what's driving that? Or you'll look at process. But at the end of the day, in a brokerage, which is really people and technology, that's what you look for. And I think some of the common mistakes that we see, you have a founder that built the business, they build it up, it's really all them. They bring good people around them, probably don't invest in that next tier up, and they want to go sell their business. And I'm like, if you leave, that's pretty impactful. And they're like, no, I'm not running the day to day. I'm like, but you built this thing. Has anyone else sold anything new? Right. I mean, I asked that question and they're like, and they're like, well, I'm only in the office 10 hours a week. I'm like, well, when they really need you there. So I think that key person, founder, that's a common one. You got to bring some other talent around you. And it's probably going to cost you some money. So I was making $3 million of EBITDA last year, or $2 million, whatever the number is. Like, if you got to invest in some talent, you're making less money. You're better off doing that if it's the right one that you can sell for more later. The problem is bringing in talent's hard. And sometimes you bring someone in and it doesn't work out. So I think that's what happens, is it's so hard. But the common thing, I think people try to sell a business, if it's an educated buyer, they're going to sniff out, do we have a business that can maintain the business and grow, right? And sometimes that really isn't the case, because you said there's no long-term contracts. Customers have a lot of different options out there. Why do they choose to do business with you? Your service levels and relationships. And so I still believe strongly it's about talent. The talent is going to drive all the other ancillary pieces, which are really important, including technology.
So do you think it's very important that founders out there, I don't want to say remove themselves from the day-to-day, but build an actual organizational structure to where they're not responsible for driving any and all revenue, or they have those? Because I look at data is data. You can't argue with it. At the end of the day, the Pareto principle is a very real thing for a lot of businesses out there, especially inside of freight. I would say an alarmingly high amount of businesses that are built on one account, if they're lucky, 2 core accounts, and that funds 96% of the revenue and profit for their company. And it's like, again, back on that glass house comment from earlier, it's like, if you're not actively out there bringing in new business, building an org structure around that, I mean, you are the business at that point. And again, data's data. 70% of the freight brokerages that are out there are $10 million or less in revenue, right? So it's like, how many of those businesses, and every founder you meet, we want to get to 25 million, we want to get to 50 million. Well, to your point there, Chris, are you willing to remove yourself from bringing in talent to build that organization up?
Yeah, I think, and it's really hard. It's hard. I mean, again, all the businesses I talk to, we talk about that. Easier said than done for all of us, including me. I mean, we all have that issue. How do you build talent around you? But you really have to, because if you don't do that, you're not going to really have a business to sell, right? I mean, again, unless you're going to be more the exception. If you're at 10 million, or, again, it's really the $50 million mark where you can have one person. I hate to say it, but if they're really, really good, they'll put some good people around them, maybe more operating. They'll have people around them, but to build the business, once you get the $50 million mark, is really where you get like, okay, I got to bring some other real leaders around me. And maybe it's before that, but to your point, when you're talking 10 and 25, and we look at small businesses like that, they're harder. It literally is who else is in the org chart. And to your point earlier, you have to kind of force that. And it doesn't mean you're leaving the organization, but bring in a president or general manager or whatever it is. And like, you drive strategy and growth, right? And the people kind of report up through you because you are their leader. And so if you're the owner, you can still help drive strategy, coach, do some selling on the side, but you really got a real leader in there that's sustainable afterwards. And you can do a bunch of different things, whether it's financial ownership. I mean, there's just different mechanisms to convince, a GM type or president to do that. But you got to be willing to give something up too, right? I mean, typically, whether it's ownership or a good package or something, the good ones aren't going to do that for, below market. So again, you have to invest in that next talent coming up.
What is a logical timeline, do you think, for companies out there right now? Because again, like I look at with where a lot of things are, and you see a lot of big names out there saying like, hey, we're looking to buy. I'm sure there's a ton of people now who are like, hey, come buy me. But at the end of the day, you're bringing up a lot of things where it's like, I think right now a lot of organizations are fundamentally lacking out there, specifically inside of transportation. So it's like, what is a valuable piece where people can like build up off of it, right? Where it's like that logical step. Is it bringing in actual leadership at that point? And then, or is it partnering, with an advisor, or somebody like yourself who can kind of walk them through to build this stuff out?
I mean, realistically, it's 1 to 2 years, and probably closer to 2, because typically you're going to have concentration at the customer level and you're going to have concentration at the management level, right? So you got to work on both of those. Easier said than done. Now, maybe on the customer side, a lot of buyers will look to do some structure and some earnouts, but I think most people know, yeah, like you said, a lot of them are living off 1 or 2. That's not very good, right? So take a little effort to build some other business to look at, where you have some less concentration. And then back to the earlier point is, okay, if you have someone in your organization that can get to the next level, that's a big if. That can be hard, but it can be done. You got to start giving them the reins to do that. And that's hard for owners, right? It really is. We're like, they're making some of those decisions and they're driving compensation or whatever it may be, or you got to bring someone in from the outside. And if you do that, that doesn't happen overnight. So, like I said, it's 1 to 2 years to work on all those things, getting your financials in a better state. There's some just core cleanup stuff that'll make the process a lot easier. Buyers coming in, if it's a mess, that's going to scare them off pretty quick. And there's things you can do to be in a better position to look good for buyers.
How do you think this next cycle is going to be different from the M&A craze that happened kind of like post-COVID 21, 22? And, I think that, one thing I learned, and, I'm not going to mention any names out there, but I've heard from very credible sources that there was a lot of businesses that were like on the verge of bankruptcy, had high revenue numbers, and they were like lucky to get acquired. And then because people were just like buying businesses for revenue. Is it going to be different now, Chris, where it's like, no, you have to actually show that you're making money. We're not just going to buy you because you're set up with a couple of customers and you're doing 500 million a year, but like you're breaking even. Is that not going to be appealing business here moving forward?
I think it's different. I think if you go back in those glory years, you had so many other investors from outside the space. Private equity was blowing up. You had a lot of things, and they were just looking to deploy capital in a big fragmented market. A lot of artificial capital. I think it's different now because everybody knows the freight market has had a great freight recession for 3 years. So again, I talk to a lot of investors and they basically say that in 2018, 19, 20, all these other years where people are buying all this stuff for whatever and crazy multiples, and they didn't have that behind them. Right. And so now you've got people and they got easy access. They're like, why are we going to go buy a bunch of that and low margins? Again, for a lot of investors, like I'm in brokerage, making 5%, that's not bad, right? So I do think it's going to be different. And so if you don't have as many investors that are probably uneducated or deploying artificial capital, that's going to happen less. Where I've got a $500 million company that's losing money and someone just writes me a big check. I think that's going to happen less. I actually think there's going to be better investors who are in the space, strategics, people like us who understand it, that are more active and can bring some value as well. Now, again, the private equity world has got so much capital to deploy, they'll always be a piece of it. But I don't think it's going to be like it was during those years where it was pretty crazy.
Yeah, it's because it is. It's like I heard a lot of this stuff kind of come down the pipeline, and I'm like, wait a second, they weren't making any money at all, and because I guess maybe it's because I bootstrapped everything, Chris. Like I can't not make, like I have to make a profit, otherwise I go bankrupt. But it was kind of like a whole new world out there that I was learning. And so it's like, with all that being said, do you think now that there's going to be a rise in like boutique brokerages and boutique operations out there? And I don't ever want to say the death of mega companies because big business is always going to be around. But do you think that, if we look at the top 100, it's not going to have too many billion-dollar players anymore? There could be, or it's going to be like more diversified out there. Because I don't know, man. I'm looking at a lot of what I'm seeing out here, and I think that if we're looking at it from a risk mitigation standpoint, I don't know if a top 5 is going to buy somebody in the 25 to 50 moving forward with after this post-SCOTUS ruling. We're already set up with the same customers. Like we don't need any more market share from them. Right.
A lot of the strategics, and I can see where they're coming from. Like, why put a bunch of risk and buy market share and then deal with integration, inherent challenges, and people stuff? And all the big guys are trying to do less people. They're all going down that path. So that will be interesting. That's the one. It's hard to tell. I think you're going to get a few strategics that look at it differently and get more acquisitive, and then you're going to have a bunch that don't. It's still, at the end of the day, it's still a big people business, and managing a lot of people is hard, right? I just think so. What I believe is if you can get over that first hump, call it 100 million in revenue, right? And you're getting closer to 200. I think there's more growth there that eventually get into $1 billion versus, hey, I'm 5 billion or I'm 3 billion, and get into that other than M&A, just organic growth. I continue to believe, but the first 100 million is the toughest. Like you said, most people are 10 or less or 15 or 25. That'll be interesting to see how they think about growth and partnering, or do they sell out and stay on, right? Again, that's the other thing, that historically people want to sell their business and move on. I think there's going to be more opportunities to sell, merge, do it together. But if you do that, find the right partner, and don't just, not the first phone call you get, say, yeah, that sounds great on paper. You got to get to know that person and really do a little bit of homework on their background and how they treat their partners and how they can bring value. But I think you're going to see more of that. Then you can leverage working capital. You can do a bunch of things for, small businesses. There's a lot of challenges out there. And, I think partnering with the right one and sticking it out for a while, it's not realistic. Someone's going to write you a big check if you are a small company, just because like you said, the value prop and the concentration is tough.
Yeah. I mean, what's the general multiplier out there now, right? Because I think we looked at what happened a couple of years ago, and people were essentially getting paid off of revenue, right? Like they weren't even getting paid off of profit. So it's like, what are we looking at, like a realistic thing now? Is it 1x, 2x of what your actual profit is?
Yeah, it is. I mean, again, most M&A worlds, it's EBITDA. It's a form of operating income, and if obviously brokerage, a lot of that is, which should be your cash flow pre-tax. I don't see a lot out there that are doing revenue kind of multiples in brokerage, or even the carrier. I mean, think about just freight transportation and all the different things that, where that makes sense is technology, but otherwise, and I think that the technology craze, a lot of technology investors starting, and they called it digital brokerage, or I'm like, okay, we all know how that went in general. They were getting big technology multiples that really didn't make sense for their business model.
Yeah, no, I hear you there. I think it's going to be interesting, right? Like my bold prediction is there's going to be a $100 million freight brokerage that has 10 employees. Like I think that with where AI and automation is going, I don't know when it's going to happen. I just think that that's going to be a thing, and I think like that's going to set the tone for how things are going to be done moving forward. That's going to be the value that I think a lot of outside capital will be looking for at that point. Is because like you can operate on lower margins, but like your exposure, your overhead is significantly lower. I think that's the environment that it could look into. And look at Robinson right now out there. Like they're talking about this, like they're kind of laying the groundwork for a lot of that. Yeah.
And back to my earlier points, if you think about that, if you think about you're a person in the industry, those 10 people and that 100 million are really important, right? So, and they're wearing a lot of hats, and they've evolved, and they're using AI and Claude, doing all these type of things. In the old days, you're like, oh, that's a lot of work. Let's hire another person. Oh, I don't want to do that. Let's hire another person, right? I think the people who can pull off that, and whatever the ratios are, you're definitely right. It's going to be less heads. Those heads are going to be more important. I think they're going to have to be more versatile, and they're going to be a big piece of the growth. And they're going to figure out how they leverage the technology. Somebody still has to sell. Someone still has to do some of these relationship building. There's other pieces, but yeah, think about that. How valuable that would be. Is like, okay, you had 10 people driving 100 million, and now we need 18 people to get to 200 million, right? So your ratio is still, on the way up. And the reality is you can pay your people more if you do that. And I think everyone's winning in that organization. Hopefully that's the attitude, because I think what's happened in the past a while, everyone wanted to build their own kingdom and build their own teams and spend a bunch of other people's money and build these. I think hopefully going forward in this new world that we're in, you're more like, let's do more with less and get more flexible on how we do that to build something. Because to me, managing a lot of people is really hard. I managed a lot of people, right? I mean, think about all the people that rolled up to me. Originally, it was 1,000, right? That's a big organization, and so he spent a lot of the time on kind of people issues. And so I think it's a good thing if that's where we go. And hopefully that will create more jobs because you're just going to have more activity and more things going on in the future.
No, I love it. Chris, thank you so much for your time today. How does anybody reach out to you guys to find out more about what you got going on?
Yeah, definitely. Our website is Koliway, so www.koliway.com. You'll find me and my partners out there. Obviously, you can look me up on LinkedIn as well, Chris Kolquist. So, yeah, we'd be happy to take calls and emails. And we're very active in the market right now. There's a lot going on. But yeah, would love to connect. So, Chris, thanks for the time. It's been a great discussion. I love talking about the market. Super excited about where we're going.
Perfect. Chris, I appreciate it. If you guys can't find Chris or Koliway out there, hit me up. I will gladly put you guys in contact with them. But that is going to be it for today, ladies and gentlemen. As always, if you got value in what you heard and you're not subscribed, subscribe to the show, you guys. And if you're feeling ambitious, rank it on iTunes and Spotify, because if you see value, your network's going to see it as well. I appreciate you guys. I love you guys. And we'll be talking to you soon.